MA1 Part D. Cost Accounting. Chapter 6. Accounting for Material and Labor Costs. The topics that this presentation will cover are 1. Types of material. 2. Ordering inventory. 3. Accounting for materials. 4. Remuneration methods. 5. Unit labor costs. 6. Gross pay and deductions. 7. Accounting for labor costs. 1. There are 3 main ways to classify materials. By the substance they are made of, for example, wood, plastic, metal, wool, etc. By how they are measured, for example, by liter, meter, kilogram, bag, packet, etc. By their physical properties, for example, color, shape, fire or water resistance, abrasiveness, flexibility, quality, etc. Raw materials are goods that go into making the final product. Examples of raw materials are illustrated in the table below. The raw material, clay, for making the finished good, a terracotta pot. The raw material, timber or wood, for making the finished good, a dining room table. The raw material, paper, for making the finished goods, books. Stop the lecture. Do the question on page 99 of your interactive text study guide. Work in progress are materials that have started to be processed into the finished goods, but the production process is not yet complete. Raw materials become work in progress, which becomes finished goods. Finished goods are the products that are finished and ready for sale. Stop the lecture. Do the question on page 100 of your interactive text study guide. 2. When materials need to be ordered, the amount to be ordered will either be a predetermined amount by the business, or based on the future plans of sales and/or manufacturing of the business. The formula for inventory is the units produced equals the units sold plus the units in closing inventory less the units in opening inventory. The business needs to produce enough to cover sales volume and to leave enough for closing inventory, but the business starts off with opening inventory, so to find out how much we need, we deduct the opening inventory. The principle of adding units needed for closing inventory and deducting any in opening inventory can be applied to other areas. For example, materials purchases equals materials usage plus closing inventory material less opening inventory material. For other examples, see page 101 and 102 of your interactive study guide. Stop the lecture. Do the question on page 102 of your interactive text study guide. When materials are purchased, the double entry is debit, the material control account. Credit, how the material was paid for, either the payables account, or the bank account. Materials that are issued to production are either direct or indirect materials. The double entry for direct materials is credit, material control account. Debit, work in progress account. And the double entry for indirect materials is credit, material control account. Debit, production overhead account. Stop the lecture. Do the question on page 104 of your interactive text study guide. There are a different number of ways to value inventory. FIFO, first in, first out. Material is issued at the price of the oldest item in inventory, at the time of issue. The remaining inventory is valued at the price of the most recent purchases. Each batch that is purchased is kept separate, and is valued separately. LIFO, last in, first out. This method is the opposite of FIFO. Materials are issued at the price of the most recent purchase, and the remaining inventory is valued at the price of the oldest items. Each batch that is purchased is kept separate, and is valued separately. There are 2 main weighted average pricing methods. Cumulative weighted average pricing, which calculates the average cost of all units in inventory, when new inventory is received. And periodic weighted pricing, which calculates a new inventory value at the end of a period. This method must be applied backwards, because the cost of materials can only be calculated at the end of the period. For examples of the different methods, FIFO, LIFO, cumulative weighted average pricing, and periodic weighted pricing, see the examples on pages 105 to 108 of your interactive text study guide. The advantages of FIFO are: it is a logical pricing method, as it represents what is physically happening. It is easy to understand, and to explain to managers. And the value of closing inventory is near a valuation based on the cost of replacing the inventory. The disadvantages of FIFO are: it is cumbersome to operate, because you need to identify each batch of material separately. Managers find it difficult to compare costs, and to make decisions, when they are charged different prices, for the same material. The advantages of LIFO are: inventory is issued at a price that is close to the current market value. Managers are continually aware of the recent costs when making decisions, because the cost being charged to their department or product is the current cost. The disadvantages of LIFO are: it is cumbersome to operate, because you need to identify each batch of material separately, and it sometimes results in batches being only partly used, before another batch is received. It is the opposite of what is physically happening, so it is difficult to explain to managers. It makes decision-making difficult, because different prices are charged for the same material. The advantages of weighted average pricing are: there isn't a big fluctuation in prices, which makes it easier to use the data for decision-making. It makes the administration of inventory easier than FIFO and LIFO, because there are no batches to keep separate. The disadvantages of weighted average pricing are: the resulting issue price is rarely the actual price paid, and it can run into several decimal places. The price of the materials tends to lag a little behind the current market value, if there is gradual inflation. Here are some points to remember about inventory values. In a period of rising raw material prices, the closing inventory values are higher, using cumulative, than periodic weighted pricing. The closing inventory values are higher, using FIFO, than LIFO. And the production cost will be lower, under FIFO, than LIFO. 4. The different methods that can be used to pay employees are: shift allowance, are the extra wage payments that are paid to employees who agree to work shifts. Output-related pay, is when an employee receives a wage that is directly related to the output that they produce. Piecework, is when an employee is paid according to the amount of units that they produce. There are two variations to this method. One is, that there is a guaranteed minimum wage, in case there is not enough work for the employee. The other is that there is a differential piecework system, in which a higher unit amount is paid, the more units the employee produces. For an example of a piecework system, see the example on pages 109 and 110 of your interactive text study guide. Premium bonus scheme, is when an employee is paid a flat hourly rate, but is rewarded for high productivity with a bonus. This scheme only works, if an employee has full control over his productivity, or speed of work. In a typical scheme, a standard is set, and if the employee exceeds the standard, then the value of time saved, or extra production, will be split between the employee and the employer, according to a formula, so that the employee benefits from the bonus. For an example of a premium bonus scheme calculation, see page 110 of your interactive text study guide. 5. The labor cost is a large and key element of the cost of a product. Changes in the remuneration method, and the productivity of the workforce, can affect the labor cost, and because labor cost forms part of the unit cost of the product, it will also affect the unit cost for the product. 6. Once the employee's gross pay has been calculated, the employer needs to deduct income tax and employee benefits from the gross pay, to get the net pay, that is then paid to the employee. So the total labor cost to the employer, is the total gross pay of the employees, plus the employer's benefit contributions. Stop the lecture. Do the questions on pages 113, 114 and 115 of your interactive text study guide. 7. Direct labor costs are the costs of hours worked by the production workers, who work directly with the product, at the normal hourly rate. Indirect labor costs include the overtime premium of the direct workers, and any idle time hours of the direct workers, as well as the cost of hours worked by the indirect workers. Overtime premium is the amount paid in excess of the normal hourly rate of overtime hours. It is treated as an indirect cost, unless it is worked at the customer's request. Idle time is the time during a working day when no work is, or can, be done. Its cost is treated as an indirect labor cost. Stop the lecture. Do the question on page 117 of your interactive text study guide. The double entry for accounting for labor costs are: debit, the wage control account with the gross pay, which equals the net pay plus tax deductions and benefit contributions. Credit, the bank account used to pay the salaries and wages, and credit, the tax authority's creditor account, in South Africa, that is SARS, for the income tax and the benefit contributions that are to be paid to them. For the direct cost: debit, the work in progress, WIP, account. Credit, the wage control account. For the indirect cost: debit, the production overhead control account. Credit, the wage control account. Stop the lecture. Do the question on page 118 of your interactive text study guide. This is the end of Chapter 6. What will follow next is the quick quiz. After the quick quiz, do the online questions for Part D Chapter 6. It will be good practice because the online questions are set out like the exam that you do at the end of the course. They will also test your knowledge of this chapter. Quick quiz. Question 1. What is the name of the amount paid in excess of the normal hourly rate for overtime hours? A. Overtime payments. B. Overtime premium. C. Overtime excess. D. Overtime special payment. Question 2. If overtime is worked at the request of the customer, how is the overtime premium normally treated? A. As a direct labor cost. B. As an indirect labor cost. Question 3. How is the cost of idle time hours usually treated? A. As a direct labor cost. B. As an indirect labor cost. C. Neither of the above. Question 4. What is the double entry for direct labor costs? A. Debit, wages control. Credit, work in progress. B. Debit, wages control. Credit, payables. C. Debit, work in progress. Credit, wages control. D. Debit, payables. Credit, work in progress. Question 5. A system where the amount paid per unit increases as the individual's production increases is known as: A. Shift work. B. Idle time work. C. Bonus scheme. D. Differential piecework. Question 6. What is the double entry for issues of materials to production? A. Debit, materials control account. Credit, work in progress account. B. Debit, materials control account. Credit, payables. C. Debit, work in progress account. Credit, materials control account. D. Debit, payables. Credit, materials control account. Question 7. In a period of rising prices, which one of the following will be true with a FIFO system of costing inventory when compared to LIFO? A. Product costs are overstated and profits understated. B. Product costs are overstated and profits overstated. C. Product costs are understated and profits understated. D. Product costs are understated and profits overstated. After doing the quick quiz, do the online questions for Part D, Chapter 6. Do the questions, until you achieve 80%. Replay the lecture as needed.